So yeah.
Hello?
I will send it to you. Okay, I will send it.
All right. So today's discussion is all about cryptocurrencies and the future of money. But let's backtrack for a minute. Let's talk about money, hard cash. Now, buying and paying for goods is a fundamental part of our lives. It's standard. Money acts as a medium of exchange and as a store of value, which allows us to procure goods that we desire. And although the world now uses hard cash and credit cards to buy different things, and we've now made the shift to digital currencies, this wasn't the case 7,000 years ago. So how did we get here today? Well, it all started off with the barter system about 7,000 years ago, and that's where you'd physically exchange one good for another. So, milk for eggs. There wasn't a set value that people used to compare one good for another, and that made things a little challenging. Now, much later came metals and coins, which a lot of us are aware of. Silver coins, gold coins, those were used as methods of payment. Again, a difficult issue, and it was to do with practicality. They're difficult to handle, they're difficult to move around with, and they're very easy to steal. So about 1,500 years later, we moved on to paper money. We're familiar with it. It's fiat currency that we deal with on a day-to-day basis. Much easier to work with, much easier to transact with, but we then get the issues of forgery and theft. Move forward another 7 years, and we have credit cards. Everyone knows what that is, everyone uses it on a daily basis. But with that came the risk of credit card frauds, high processing fees, and an issue of centralization of power. And now we're at cryptocurrencies and digital currencies. So digital currencies were first introduced in 2000. However, it wasn't until 2009, when the white paper for Bitcoin was first introduced, that we saw a viable option as cryptocurrencies as a means of exchange. So, what is a cryptocurrency? There are many conflicting opinions about its purpose and its value in our lives. Here are a few that some of the most influential leaders in the financial sector have put forward, and they maintain a rather sour outlook on its value. The CEO of JP Morgan, for example, said it was a fraud. Warren Buffett said it was rat poison squared, and in an extract in the congressional testimony, stated that crypto is the mother of all scams and now busted bubbles. So, are cryptocurrencies this? Or is it potentially the future of money? So let's look at a standard definition of cryptocurrencies. These are digital currencies that we can use to buy goods and services. Some cryptocurrencies, like Bitcoin, are decentralized, which means that they operate without a government or a credit card company or a bank monitoring the transactions that take place. On the other hand, we have centralized currencies. These are issued by governments and by banks. And the opposite to what I just said, these are monitored and all the transactions that take place are accounted for. So in the last decade, we have witnessed a hype around cryptocurrencies and in particular Bitcoin. For some justifiable reasons, people think of it as the future of money. But let's look at two things that are needed in order for a currency to have value and to be successful. The first thing is that it has to be legal tender. That means that a government has to legalize it as a means of payment. Legally, someone has to accept the currency if someone's giving it to them. The second thing is that it must maintain a self-fulfilling equilibrium. This means that people agree to accept the currency because they know that other people in society are going to accept it as well. It's this common belief of individuals that the currency will be accepted that gives a currency value. And in order for a currency or for a cryptocurrency to be successful, users should therefore have some certainty about whether others will accept it. And all the value that cryptocurrencies hold, the reason that Bitcoin is priced at $60,000 is because of this common belief that other people will one day accept it as a means of payment. So we talk about it as an equivalent of the US dollar. But let's look at some of the reasons that it actually is beneficial. So the first thing is that it allows for quick, traceable, transparent, and immutable transactions. It lowers the cost of transferring money, and it increases the speed with which transactions take place. The next thing that some individuals find incredibly attractive is that it's not controlled by a centralized intermediary. There is no government, there is no credit card company controlling or overseeing the reactions that take place. There is this degree of independence and autonomy that comes with cryptocurrencies, and it's incredibly attractive. The next thing is that it can act as a hedge against inflation. So in volatile economic conditions and climates, there's a chance that currencies depreciate in value. And in this instant, Bitcoin or other currencies can take the position of what gold and silver do and act as a hedge against inflation and protect the real value of our money and consumers' money. So let's compare and contrast for a second. Fiat currencies are backed by the sovereign of a government, like the dirham in the UAE or the US dollar. They're backed by a government. Gold has it's a valuable metal. It has value if you sell it on the market. But cryptocurrencies hold no intrinsic value. And that's where the controversy lies. Again, like I mentioned, the entire the only value that cryptocurrency holds is because of this common belief that individuals share. They exist and have a market price because a population of people use it and believe that others will use it as well. So I am bringing this to your attention because Bitcoin, which is the largest and the oldest decentralized cryptocurrency, has a market capitalization of $800 billion. And we've seen in the last decade how its price has fluctuated, and you can see it on this graph as well. In November 2021, the price skyrocketed to a record 61,000 US dollars. This was spurred on by the economic conditions during the COVID pandemic. Very shortly after, it has fallen and is currently trading at somewhere close to 40,000 US dollars. Cryptocurrency bubbles like this have taken place numerous times in our history and are entirely speculative. Often they are spurred on by the media, by fake and exaggerated news, and also the confidence of investors during periods of high economic growth. And there are two key factors that need to be taken into consideration when we're looking at cryptocurrencies. Again, like I mentioned, cryptocurrencies have no intrinsic value. Their entire price or value is defined by the market, by demand and by supply. Now, supply for Bitcoin is actually limited to 21 million coins. This says nothing about the price. Its price can go up and down, but there can only be 21 million coins in circulation. It's a number that we haven't yet reached. If those watching are familiar with the fact that coins come into circulation when they're mined. We haven't mined them all yet. That will happen in the next 100 years. So supply for the currency is very much stable. So by effect, demand is the main driving factor in the currency's volatility. Now, as of 2020, the top 10,000 wealthiest investors hold 1/3 of the world's Bitcoins. So 10,000 of the top investors hold $260 billion worth of Bitcoin. That is an incredible figure. So if any of them were to, let's say, hypothetically liquidate their positions or sell their Bitcoins, what that would cause is smaller investors to do the same. And what we see and witness in the matter of hours, if not days, is the price of Bitcoin plummeting. And it's happened in the past. Now, another thing I'd like to draw your attention to is the average crypto investor profile. Cryptocurrency is a very easy market to delve into. There is no price for entering the market. You don't need to obtain any legal support. All you really need to invest and to trade is access to the internet and some money on hand. So we have the market flooded with amateurs looking to make easy, hard cash. So because of that, cryptocurrencies are incredibly speculative in nature. And the value of it shifts up and down on a daily basis. So that's one of the reasons that Bitcoin as a cryptocurrency is so volatile and responsive to market movements. So now, taking this all into account, is the price of cryptocurrencies justified? $60,000 for one Bitcoin? Really? Where does that come from? People often say that dabbling in Bitcoin lies somewhere between gambling and investing, the 50-50% chance. So, does it have any value? Many people say no. Unlike gold or a fiat currency, or even stocks for that matter, there is no intrinsic value. So there's no real footing. There should be nothing giving it that price. But really, it's the mentality of investors that gives it such a high price. So we've talked about cryptocurrencies potentially acting as an alternative to, let's say, the US dollar, and sort of coming into our lives on a more standard basis. But it is incredibly volatile, it is an incredibly speculative instrument, but what is the architecture, the technology, or the government regulation that we need in order to make cryptocurrencies like Bitcoin a standard part of our lives and give it the ability to compete with the likes of the US dollar, for example? Let's talk about a world example. El Salvador was the first currency to have adopted Bitcoin as legal tender. Now, the reasons that it gave for adopting the currency were mainly to do with reducing the currency's reliance on the US dollar, reducing the cost of transacting, to boost domestic foreign investment, but also to support the 70% of Salvadorans without access to financial services, or the unbanked population. This took place 1 year ago, but 6 days ago, the International Monetary Fund urged El Salvador to drop Bitcoin as legal tender. Why? Well, according to the graph from before, again, incredibly volatile. The price fell by about 20K in a matter of 10 days. And that reduced the purchasing power of investors by a long shot and by citizens. So it made the entire process incredibly difficult for citizens. And it made the market very uncertain for consumers. One other thing that Bitcoin allows, and I probably should have mentioned it earlier, is that there's an anonymity that comes with the network. No one can physically track a Bitcoin private wallet to you as a person. So what decentralized currencies like Bitcoin allow you to do is transact illegally and criminally without actually, being caught by the government or by regulatory forces. And that's one issue, one reason that governments around the world aren't willing to accept cryptocurrencies like Bitcoin into their economy. So, will other countries follow suit after El Salvador? The media definitely talks a lot about it, but honestly, no. No uniform international laws are currently in place that regulate the use of Bitcoin. And some countries, like Egypt and China, have gone as far as deeming the currency illegal and mining the currency illegal in their country. So without a general consensus between the superpower nations in our world, it's unlikely that Bitcoin or anything like it is going to be accepted as legal tender, or that it's going to be adopted as a standard means of exchange in our lives. And I say that because we often talk about how difficult it is we often talk about how easy it is for governments to control our lives. Governments hold significant power over the future of our currency. If any of them were to deem it illegal, it's gone. Everyone saw how when China announced that crypto mining is going to be illegal in the country, the value plummeted. Because if other people aren't going to use the currency, there's no value. That self-fulfilling equilibrium is disturbed. Now, one example of a government-issued cryptocurrency, and like I mentioned, government-issued cryptocurrencies are centralized. There's one entity controlling the transactions that take place that can easily monitor what's going on. These are different from decentralized cryptocurrencies and don't have all the benefits. But one example was something that the Chinese government implemented, and that was ECYN, a pilot digital yuan. Essentially, it was the digital version of the yuan. It's very much backed by the sovereign, but it has some of the benefits of cryptocurrencies in that you don't face high transacting costs when you transfer money to a merchant when you're buying a good, or you wouldn't incur many fees if you were transferring money abroad, for example. Time for transactions to take place would also go down incredibly by an incredible amount. So there are many benefits to it, but again, it's centralized. It doesn't hold most of the benefits that something like Bitcoin would offer. So let's go back to our question. Is Bitcoin, are decentralized cryptocurrencies, are they really the future of money? Unfortunately, most investors currently look at Bitcoin as a means of rapid wealth creation. It's volatile, unregulated, and heavily speculative. It's impossible, but however, it is possible to imagine a future in which Bitcoin eventually replaces some fraction of money as we know it. But we don't know yet if it will be a decentralized version of the currency or a centralized version. My bets are that it's going to be a centralized version, because governments will not accept a currency unless proper laws and regulations are put in place to monitor transactions. We are always going to face this trade-off between independence and centralization of power, because no government wants to give up control. And it isn't a selfish thing, it's a practical reason for that. Governments benefit from being able to manipulate the market, to manipulate the money supply, in order to intervene during recessions, to support businesses, consumers, and the economy to grow. And Bitcoins or other decentralized currencies kind of throw a wrench into this, making it difficult for them to intervene and correct market failures during economic downturns. We can expect cryptocurrencies to play a greater role in our lives in the near future, probably as a speculative instrument, but in the long term, 10 or 20 years from now, only if governments hold significant power can we see it as a standard part of our lives. And will we really see it as a means of transacting on a daily basis? So we've talked a lot about the future of money, and we have a few questions prepared from a few students that we talked to who are interested in cryptocurrencies as to play a fundamental part of our lives. So I'm just going to invite Yashita to the stage, and we're going to have a quick Q&A session. All right, so we've talked a lot about the volatility of cryptocurrencies. Can you give us a specific example of when that's taken place? What caused the cryptocurrency bubble of 2018? And what led to its ultimate crash?
All right, so in 2018, a lot of people were attracted to the scarcity of Bitcoin. And as Nanki's mentioned before, there's only a limited number of coins that are available, and there's a limited supply. This caused a lot of FOMO in people. They wanted to get onto this trend. It was sort of the hype at the time. Companies were moving towards this new technology because it was trending, it was cool, and it was something new that they wanted to experiment with. And a lot of large investors like AP Morgan, Paul Tudor Jones invested in this sort of technology. And this all helped to increase trust in the cryptocurrency, and it indicated that things were becoming more mainstream when it came to cryptocurrencies, the Bitcoin, and all of this caused sort of a rise in prices of Bitcoin and created the bubble itself. Now, all of a sudden, there was a crash that in 2018. And why did this happen? Because of regulations. A lot of countries like China, the USA introduced levies. For example, the USA introduced a levy on companies that were involved with cryptocurrency. China introduced a lot of regulations. And because of this, people didn't see where they could use this sort of currency. They didn't know how in the long run this would be useful to them, where they could invest in it. What they could exchange it for. So as a result, they started selling off all the cryptocurrencies they owned because they feared that they would lose all their money.
Right. So again, it all comes down to how much power governments hold in determining the value of cryptocurrencies in the long run.
Yeah, because again, these aren't, backed up by any sort of government. They're completely unregulated.
Yeah.
So.
And again, with the 2018 crash, it was that self-fulfilling equilibrium that was disturbed.
Yeah.
Yeah. All right. So a rather futuristic, forward-looking question. I've mentioned it before, but let me ask you, will cryptocurrencies ever pose a real threat to established currencies that dominate the global market, like the US dollar, for example?
Yeah, now again, the US dollar is backed up by the central bank of the USA. It guarantees its holders a return for what it's worth, and it is accepted in exchange for goods and services within the country. On the other hand, cryptocurrencies are decentralized and unregulated, which means that they do not hold the same amount of dependability, which will hinder them from ever being able to take over these already established currencies.
Right. All right. Thank you so much for that. All right. So, as we wrap up our event, I would like to extend a huge thank you to the India Pavilion at the World Expo 2020 for giving us the unique opportunity to present at a national level platform, to give high schoolers like us the exclusive opportunity to do something like this. And I would also like to thank all the viewers at home who've taken their time to listen, and the people here in our crowd. And I would also like to thank my co-host Yashita Saxena, who is, like myself, a huge blockchain enthusiast and has been a pleasure to work with.
Yeah, and once again, I thank all of the viewers watching this, and I hope that this event was useful. You took a lot from it, whether you already had a lot of knowledge about blockchain and cryptocurrencies in the past or not. And I really appreciate your support going forward.
Yeah. And with that, I'd like to wish everyone a very good night. Thank you for tuning in.